Everybody, this is John, and wow, got a frog in my throat, and I could restart this video, but where's the fun in that? So we got about 30 seconds left before the market opens on Thursday. This is a small trade that was done on Tesla. Wow, early morning. I should have gargled some salt water or something like that. So what's interesting is one of the things that I've been looking at, and I continue to look at earnings plays to kind of find the best risk-to-reward ratio, and you'll note that this call credit spread closed at 212. I actually sold the 205 call, which was deeper in the money, and then bought the 220 as protection. Tesla at this point is going to gap down. Obviously, I was bearish on it, and so the reason why did I do this? Okay, so now at the open, we should have max profit, which we do. So a couple questions on this. Why did I do this in the money? And what I was doing is I was looking for that 1-to-1 risk-reward ratio at the money. So had I done this at the money, then and had I been wrong, then I would have lost about $1,500 in an attempt to make $760. But you can see here that this credit was $7.67. It's a $15 spread, so it's almost exactly a 1-to-1 risk-reward ratio. So my bet is that the expected move was like $18. We closed at 212, so a drop of $7, which would be less than half the expected move to the downside. I could sell that 205 call and then be done with it. Now, of course, at this point, now Tesla may rally like a bat out of hell, right? I don't know. Is there any reason to keep the short option anymore? No. Yeah, it's 45 cents, and I could milk another, $45 out of it. If it expired worthless. But it's also possible that Tesla just may rally. In that case, I'm just going to keep that long option in case it does. Chances, of course, are very, very, very small that that option is going to do anything. Now, on this, I don't want to be a dick for a tick. This, we're going to see a little bit of kind of craziness here. I sold that thing for $13. Look at that, jumped up to 87 cents. So do not to be dick for tick. On something like this, you just want to get out there. All the risk is off. The profit is booked. And now, if this thing does go insane in reverse today, this $220 call could become a lotto ticket. Okay? All right, so that one is done. And then just real quick, I want to look at positions here. This is just a quick review of positions we have on live right now in the trading room. So for Amazon, this is something we sold the 370, 365 put spread. Sold it for $1.22. It's at 63 cents. All right, now this is something that we could take off. I'm comfortable though that we could actually get a little bit more out of this. I mean, Amazon, of course, today would have to, at least stay steady. What I don't like is that if we're too close to the strikes, but right now we're about one standard deviation away from the strike that we sold with 2 days left. Meaning that we could probably eke out a little bit more. Okay, you got to be, this is a fine line here because it could get very ugly very quickly. For LinkedIn is a different story. Now LinkedIn's up today, which is good for these positions. So I sold the 265, 260 put spread, and the expected move is now $5. And at this point, that's good for this one because now we're kind of, we sold this one for 212. Right now it's at 53 cents. I could buy this one back. I mean, that's a decent profit. The idea here is if you get to like about 80% of your max profit, then, well, hold on. So $2.12, right? So 80% of max profit, how do you figure that out? 212 times 20%. I can't really do that in my head too much. So what I do is I just do 10%, which is easy, 21 times 2 is 42. So 42 cents would be max profit. So what I'm going to do here then is just create an order to buy this back at 42 cents. Okay? I don't need to be a hero and get it for zero. But 42 cents is fine, and that's a day order. Okay? All right, so that order is working. Now, this one, on the other hand, I did this one as a 1-to-1 risk-to-reward ratio, the 272 half put and the 267 half put. Well, no, it wasn't 1-to-1, but I got what? Now I'm thinking back. So I got $2 for it, and okay, no, this was done the other day when LinkedIn was a little bit higher. So at the time, it was kind of an at-the-money put spread. So no, it's actually close. Okay, sorry, I thought this was in my mind. It's still early morning. I thought that was a $10 spread. Obviously, it's a $5 spread. It's not quite 1-to-1, but if it was 1-to-1, I would have sold it for $2.50. So it's down a little bit, but same thing here. Because it's more of a 1-to-1 risk-to-reward ratio, I don't have as much to worry about. Whereas, if that so I'm going to let this one work a little bit and see if we can get some more strength today. And then the other one that we have here is Netflix. And Netflix today also has some concerns. So for Netflix, I've got this 435, 425 put spread. That was the one we converted from a put debit spread. And then the 450, 445 put spread looks okay. However, if you look at this, the expected move is $8. We got 2 days left. Well, 1 day left tomorrow. And here we are at 452. We're almost right on top of that. That is not cool at all. So this is something where if you got to start thinking of defense, this is where you start thinking about it. And then this one is more in the money. That was more of a 1-to-1 risk-reward ratio, so not as big of a deal. But one of the decisions here is to look at this and say, all right, do we need to, do I need to get out of this? If I look at the NASDAQ futures, here, they're fine. If I can get a quote up here, they're up 25 points. So, at this point, the futures are fine. I'll just want to keep an eye on Netflix and see if it can get its act together. Okay, so that is just the quick morning open, and we will see how today plays out. And then for those of you in the trading room, I'll see you guys there at 11 o'clock.
So for those of you, if you're not sure what a broken wing butterfly is, they're very awesome because it's an incredibly low risk, high reward type trade. Meaning it's not going to work every time, but when it doesn't work, you don't lose very much, and when it does, you're making a high multiple of what you're risking. Okay, so Bruce is the king of the broken wing butterfly. He's going to have a class Wednesday, February 18th from 7 o'clock to 9 o'clock East Coast time. Okay, and of course that is 6 to 8 Central time. And he's going to be talking about what stocks work best for monthly income using a broken wing butterfly and how to find the good stocks and avoid the bad stocks. How to set up a broken wing butterfly so you know how to use it and why it works. And it's funny because broken wing butterflies actually get a rep of being confusing, but it's because people don't know how to explain them. People are explaining them that don't really use them all the time. Bruce has been using them for 20 years. When to put on the trade and when to take off the trade to maximize your profit while minimizing your risk. And of course, a step-by-step checklist of how to put on the trade and take the trade off so you know exactly what to do. The specific adjustment techniques that can protect you in a bad trade so your returns remain consistent. And this is important. And I find of all the things that people will jump in and they'll learn an initial strategy of how to put on the trade, but they don't really focus on how to, A, take off the trade, but B, more importantly, B, making it when to make adjustments. A lot of times people ask, like, they'll call me up and like, hey, this price blew through my spread or my butterfly. What do I do? And nothing. You've got to have a checklist to do it as it's happening, not after the fact. And that's what Bruce will tell you about. How to avoid the most common mistakes people make when trading broken wing butterflies, how to master the trade setup and manage the life cycle of the trade. And of course, there'll be plenty of real world examples, okay? If you can't attend it live, that's fine. It will be recorded. And if you are seeing this, you can get this at the price of $97, which for me, I always look at something like, okay, how many trades will it take me to make up the price of the class? And this is kind of one of those, what I call it a one lot, one trade class. You have a skill. You can use that skill to pay for the price of the class, potentially in your next trade, and you're off and running. Okay? Hope that helps. You guys have a great night, and looking forward to seeing you on the class.